Hello and welcome to another episode of Southbank Investment Live. I'm afraid I couldn't make it to last week's show as my internet died, but I have managed to make it this week. Now I've moved over to Staffordshire, where the internet is a lot better. My name is Boaz, Shoshan, and I'm joined once again by John Butler. John, how are you getting on this week?
Very well, thank you, Boaz.
Yeah, we've got plenty of things to discuss. I think it's the COP26 that we shall start with, John. It's been an interesting week. We've seen all manner of politicians gathering together and saying how they're going to change the world for the better. What's been your general takeaway from all of the theatrics we've seen in it?
Well, I guess as expected, right? We expected theatrics. We expected people to show up with their grandiose ideas and plans to try and reach agreements, to do things that sound very, very impressive, to appease and placate and appeal to their respective constituencies. Make it look like they're doing something about what they claim is an absolutely critical challenge and problem to solve. So I suppose in their own minds, based on their own agenda, their own orientations, their own beliefs, etc., they did well. And of course, I'm sure they enjoyed themselves. I figure there was a bit of fun involved in all of what went on up there.
Yeah, I imagine there was plenty of frivolity that we probably didn't see behind the scenes. I think it was interesting to see that rent in Glasgow was so high around that period of time that people were actually going to Edinburgh just in order to stay and visit the conference and things. It's normally the other way around, of course, when people want to visit Edinburgh. So there's a lot of sort of inter-Scottish rent arbitrage going on with that. One of the things I think we could start with in our reading between the headlines segment, where we do take a look at the news over the past week and try to figure out what's going on underneath it. There was one headline in particular which I thought we could start with. This is the news from the FT reporting here about Mark Carney and his finance coalition that has a war chest of $130 trillion. $130 trillion. Even in today's world, it still feels like an awful lot of money. And what is going on here? I find it very interesting to see that Mark Carney has re-emerged as this green vizier after he was the governor of the Bank of England. So he arrived in COP26 as an advisor to Boris Johnson, and of course as a climate vizier, but also as a green finance advisor. And if we go on to the next slide here, there was quite an interesting statement that he made. Where he said, quote, "We now have the essential plumbing in place to move climate change from the fringes to the forefront of finance so that every financial decision takes climate change into account." Now, this $130 trillion, this war chest is really just a load of financial institutions, banks, insurers, etc., that have an awful lot of money under management that are making a commitment that they'll do what they can in order to make economies transition to net zero, to reduce their emissions. But that statement, John, every financial decision takes climate change into account. That, to me, that sounds very ominous indeed. Of course, I'm sure Carney would say something like, well, if you think that's ominous, just wait until you find out what climate change is going to do to the global economy and how it's going to change all our lives if we don't do something about it. But just in general, John, if we move away from this slide and go back to our normal setup, John, what do you make of that? What does Carney mean when he says he wants every financial decision to take climate change into account?
Well, I mean, bizarrely, he's kind of being consistent in that when you're a central banker, especially a dyed-in-the-wool central banker who has worked for multiple central banks and who is part of the current mainstream, which believes that the only way to regulate, manage, and otherwise control, they claim in a benign way, economies nowadays, to make this additional leap to us, but to them, it's a tiptoe into saying, okay, fine. We also have to start centrally planning other aspects of social activity. There's not a whole lot in it. It's following the same pathology, as it were. That is, if you purport to believe that because you have the right degree from the right university and the right experience from the right bank, or central bank, or multiple central banks, in Carney's case, you therefore have the requisite experience to know, which industries, which companies, which people, and which countries around the world should or should not be allowed to emit this or that emission from whatever industrial or other economic value add process, I mean, it is the same mentality. It is the same part of the brain at work there. And Mark Carney is arguably the most successful sort of central banker of his generation, in the sense that it's very, very rare to be in charge of two central banks during your lifetime. That's quite something, right? Not everyone achieves that. In fact, almost that's the whole point. Almost no one does. The last person I can think that was in charge of two central banks in their lifetime were people that were involved in central banks for countries that were developing countries, as opposed to kind of established mature countries. So
Yeah.
it's par for the course, as it were, for him.
Yeah, I do wonder where we'll see him arrive next. I was thinking
Indeed.
he was all setting up for a career as a Canadian politician. You know, he's done his big book and everything. You know, he started out on social media, and you know, he's got all these puff pieces written about him by various journalists, which
Well, he's the Canadian Mario Draghi, right? I mean,
right.
he kind of thinks that because he has supposedly a stellar track record, at the central bank level, again, in his case, in multiple central banks, the same way Draghi did Italy as well as the ECB, he
Yep.
thinks, hey, the next logical stop is prime minister. And given the way the world works today, for better or worse, that, I guess, is the career track he's on.
Yeah, I. It is kind of ominous, I think, the amount of influence he seems to have. You always wonder where someone gets this kind of job. So once you're actually being the governor of the Bank of England, right? It's not like you go on LinkedIn and you just start looking around for who's going to hire you next. There's all manner of networks and friends and connections that they will have made, and one way or another they transition into all of these other areas. I just looking at the chat, we are seeing a fair bit of activity there, which is always good to see. Thank you to all who are tuning in and watching this live. We are trying to build our audience, so it's great to see some people tuning in. And of course, if you are watching a recording of this, we do understand that not everybody does have the time to tune in, especially on a Thursday evening. But if you are interested in leaving some feedback or requesting a topic for us to discuss in a future episode, do feel free to leave a comment below this video. John, just in terms of COP26, we will come to some questions in a second. But in terms of COP26, over the past couple of years, especially during the lockdowns, did see a huge amount of ESG stuff getting pushed. So the whole environmental, societal, and governance theme getting raised. And for investors, you need to be divesting from fossil fuels, and you need to be investing in green things. We saw huge speculative surges in green technologies. I get the impression that this isn't really going to stop. I think COP26 is maybe one of these landmarks where we see loads of commitment to further battling climate change and effectively funneling loads more money into renewable stuff. What's your take on how this might actually sort of shape markets in the decade to come?
Well, look, I mean, let's look at the world as it is. The fact is, there is a huge push, and it may be top down, it may be bottom up. It is a combination of both, if you ask me, to try and find ways to wean ourselves off of fossil fuel dependency, which, of course, was the basis for the great industrial revolution and the tremendous progress in prosperity and reduction of poverty that we've seen over the past couple of centuries. But everyone assumes, and I think it's a fair assumption, that resources are limited, right? I mean, the second law of thermodynamics, tells us that in a way, at a level which is universal, and so this trend has been in place for a long time, and I think there are a lot of good intentions behind it. But what you find when you look at history is that trends, be they top down, bottom up, or some combination of both, which I think this is, they tend to be taken over by those who find ways to exploit them for their own personal benefit. And that's when the corruption sets in. And I actually think we're quite far into that now. And I watch events like this, and I watch what they agree to, and I watch, sort of the deals that are done. And it's palm greasing. And so what does it mean for investors? Well, look, if you're an investor, you want to make money. You want to make returns above and beyond what you would make by just buying the index. And the fact is, right, clearly there is still a consensus at the highest level to throw as much money as possible at these attempts and they are only attempts because none of them have really worked yet, to come up with renewable green technology. So you kind of have to ride the gravy train. Even if the technology in the long run will be shown as not viable, didn't work, cost too much, we're terribly sorry, we whatever, you kind of have to be in it. And it's a terrible thing to say, right? When you're skeptical, as I am, that a lot of this stuff is not going to work out long term. But you kind of have to be in it. Now that said, some of it might work out, and if you're if you're genius enough to be able to know which of these technologies might actually be truly viable without subsidies from taxpayers longer term, wow. I mean, that's going to be the greatest investment ever because you're going to get all the subsidies you need along the way to do all the work needed along the way to get to that point. And if you can find those, you're golden. That's the holy grail.
Yeah, it's certainly above my pay grade, I think. Though it is worth, of course, asking the questions about it. I mean, John, do you think, cynical as we are, do you think then a good play or a shrewd play for an investor would be simply to invest in the businesses which are closest to political power in some way? So, they've got plenty of politicos on the board. They've received plenty of subsidies in the past. They've got a good relationship with the people at the Treasury who hand out the green goodies. Is that how we should try and find an edge in this market?
Well, one of the most fundamental differences, some would argue the most fundamental difference between a relatively free market economy and a relatively socialist, centrally planned economy, is that in the former, uh, the rewards accrue to competence, and in the latter, the rewards accrue to access. It's just down to who you know.
Yeah.
And certainly when it comes to this whole climate world that we've entered, it's so dependent on subsidies. It's so dependent on government policy. It's so dependent on bureaucratic processes, which are not profit driven, not price driven, but are due to discretion and access to whatever elite group you happen to be part of. That is the world we inhabit, and so yes, there's. I hate to say this, but in the world we currently inhabit, it is a legitimate investment strategy to invest in access. And I know that sounds horrible, but
Does.
that's where we are, and we might stay in
Yeah.
we might stay in this place for years.
Yeah, it does feel very Soviet. The kind of setup we're in here. There's another story. There's a sort of a twist on this, which I'd like to raise. Another headline from the FT. This one was looking at Rolls-Royce and Qatar. Rolls-Royce joins with Qatar to pump billions into green startups in the UK. So this is an agreement that the business Rolls-Royce has with effectively the Qatari government, where they're actually trying to, what I would call, manufacture unicorns. Which just to give a bit of sort of background to this. And so this is just a quote from the article. While the exact details of the partnership still need to be finalized, the ambition is to build 5 green engineering unicorns, startup companies valued at $1 billion or more by 2030, and up to 20 unicorns by 2040. Additional investment will be sought from external investors, including venture capital funds. So rather than dwelling actually on what exactly these businesses are going to do, we can move away from this headline now. Rather than concentrate on what the unicorns are meant to do, I thought I would just ask you, John, what your take is on sort of what that looks like. So a unicorn was called a unicorn because they were actually, they don't actually exist, right? They're mythical creatures. So seeing a
Yes.
unicorn in the wild was meant to be very strange. A unicorn was just meant to be $1 billion startup company, right? So it's a small startup that has managed to accrue a $1 billion valuation. And once upon a time, these things were actually, you never see one. And then, maybe in the late 1990s and then the early 2000s, investors saw these very strange creatures going around. That's what they were called, unicorns. And the whole point of it was that they had managed to do something disruptive. They had managed to, unlock some massive efficiency that wasn't capable by the big players at scale. And that's why they'd managed to get this $1 billion valuation. And so to see this sort of top-down planning of we're going to create 5 unicorns, it feels like a signal of something to me, though I can't quite put my finger on it. Would you agree with me on that?
Yeah, I would. Look, as you say, what we're doing here is we're witnessing some bizarre rhetorical confluence between traditional venture capitalist rhetoric and more modern top-down central planning rhetoric that somehow some, bureaucracy that isn't itself on the hook for making bad decisions, say, is going to get in on the game and is going to start directing some of these things. I mean, it's important to have a little historical perspective here. Who are the original unicorns? Apple,
Google.
Hewlett Packard before Apple, Microsoft around the same time as Apple. There are a number who still, in many cases, dominate the world we know today. These are the original unicorns, the people that like, clever people. Let's give them credit, right? Came up with just awesome ways to change the way we lived in ways that we've all benefited from in some way, shape, or form. In most cases, multiple ways, shapes, and forms. So that's where this all began. But as you say nowadays, right, the whole concept is just come up with some valuable company and flog it. Whether it's revenue positive, whether it's profitable or not, is almost beside the point anymore. And so now the bureaucracy wants to get in on the game. But for every Apple, for every Microsoft, for every Hewlett Packard, for every company that battled tooth and nail for years to survive, paying their best engineers peanuts to stick with it because they were passionate and they believed in the disruption of the technology that they were developing, 1,000 firms failed. For everyone that succeeded. See, this is different. We're going to pick firms that don't fail because we're backing them with the world's largest natural gas reserve, which is what Qatar basically has.
Yep.
I mean, that is not the same thing. They're kind of calling it the same thing, but it's not. It's a corruption of language.
Yeah, it's a bit like sort of fool's gold, I guess, sort of
Totally.
fool's unicorn, perhaps. Do have a comment here from Imran Jones. Good evening, Imran. Thanks for tuning in. Here's the thing. It's great to say we're all going green. However, when people flick the light switch, they want the lights to come on. Do you think they care where the power comes from? Well, Imran, I 100% agree with you. There was a very interesting article today, actually. Another one in the FT. Sorry, everything is from the FT this week. But this one was on the grand dichotomy there is between all of this green stuff going on with COP26, all this green promotion, while the fact that Brent crude, we're seeing it well over $80 now. So, oil is having a great time at the minute, while everybody is plotting its demise or acting like it's already dead in Glasgow. And one of the quotes from one of the energy analysts was saying that oil producers, all the oil majors, and of course asset managers have all made the decision. Everyone's agreed in these in the high halls of finance that oil does not have a future, but nobody has told the consumer, which does make it seem. Oh, sorry. If we can move away from that, it does. I think illustrate very well this attitude that oil's done. But then when you look in the real world, everybody wants to move around a lot. So you're seeing actually in terms of the amount of car traffic in London, it's actually higher than it was at the beginning of 2019 now. So before the pandemic, we're already at higher levels, and we're now getting into winter. Same with a couple of other major cities. Nobody is thinking that, oh, well, because oil is pretty high and maybe it'll hit $100. Nobody's thinking about not taking a holiday because everyone has been locked up for 2 years. So I think similar to this, do you think people care where the power comes on? Because people will turn on the light switch and they expect the light to turn on. It does feel like there's a big change in what the conversation being had is at home, and then in these conferences like we've got at COP26. John, what's your take on that? Because I do find it very interesting to see how strong oil is right now, despite in Glasgow people are going really, really hard against it.
Well, look, we're heading into winter, and I think to some extent, oil has been dragged higher by natural gas. Europe does have some small, and I stress small, residual power capacity, which is oil based. And also, there's a certain amount of the housing stock, especially in Central and Eastern Europe, which is still oil based heating. And so the fact that nat gas prices have absolutely exploded for reasons that have to do with politics as well as other factors, and we've discussed those before. I think some of that is in sympathy. You also have some lingering political issues within OPEC regarding production rates that have to do with the usual suspects of, to what extent Iran and Saudi Arabia and Russia can agree anything, because it's hard, right, for these countries with very disparate national interests to agree. So anyway, I do believe, however, that the increasingly clear evidence that industrial demand use for oil, and that includes transportation, and I'll expand on that in a moment, I do believe it's on the way down. I do think it's declining. I think there's obvious evidence in China that demand's coming off hard, like properly hard now. China's going into recession. That's a big deal. We haven't seen that in a generation, right? That's a big deal. But I think it's happening. I think the data is pretty clear now, to the extent any Chinese data is clear. So back to what I said about oil demand more generally declining. What you mentioned about transportation, this is a funny one, actually. You mentioned London. Guess what? I mean, the only real explanation, because London activity generally, economic activity generally, is still lower. How is it possible that car traffic is higher? Because a certain portion of the population is terrified to use public transport because of the lingering COVID fears that we have. And those will eventually fade, right? I mean, I believe it was today that the UK government announced that they now allow this COVID pill to be taken by older people, 60 plus, I believe they say, are already eligible for it. That will placate their concerns to some degree, right? Older people want reassurance from the government that it's safe to be out and about again. And these are the people that have been driving demand for private transport over public transport, which London has invested a huge amount of money in recent years.
Yep.
And has phenomenal public transport infrastructure now, which it didn't always have. Anyway, I think that's the best explanation for it, and that's temporary. That's what I'm getting at. That's temporary.
On that, if we wind into that a little bit further, John, one of the things that I feel maybe on the way, or maybe we're seeing it, is this idea that, it's certainly not my idea, but simply the concept that peak oil demand is going to occur. A peak oil demand is going to occur before peak oil supply, or ultimately when we do wean ourselves off oil and go all green and things like that, I think peak oil demand is going to occur before that point ultimately, and we may see a really, really strong oil rally during that period. What's your take on that? Because I do feel that, of course, the argument from the green side is, well, the higher oil costs go, then the more, it just makes it easier to do all of this renewable stuff, because renewable becomes a much easier argument to make. What's your take on that? Do you think we may be in for that? While, as you say, China's definitely making a move to come off oil. In terms of what the rest of the world is like and the amount of oil that is being consumed, do you think there's still juice in the tank when it comes to oil?
Look, Boaz, there are two different dynamics at play here, one of which is medium term, one of which is very long term. Let's talk about the medium term one first, okay? The fact is that whether or not there are still accessible reserves of oil, major accessible reserves of oil around the world, depends on whether the infrastructure investment is made to drill the holes in the ground, right? To get that stuff out.
Yep.
And we've actually gone through a multi-year period of exploration being extremely low.
Yeah. And
it's been low for two reasons. Number one, there was the fracking boom bust, and the bust turned a lot of people off. Like, hey, there's all this new capacity. Why look for more now? It's busted. And we've only seen a real rally in oil prices over just a 1 year period, which is not enough time to change the way people think. That's the first one. The second one is, as you say, all these subsidies for green energy. If you want to hoover up subsidies, if you want to get rich quick because you're politically connected, and you can come up with some company that has some green energy angle, and you can get rich and cash out before it's ever proven whether or not it's truly viable long term, well, that sucks a lot of capital out, right? So there's been very little investment in new capacity in the fossil industry over the past 5 years. Very little. And what that means is to the extent we are seeing a recovery in fossil demand because we're coming out of the lockdowns, blah, 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 well, there's just not going to be the capacity available to get the stuff out of the ground. That's the medium term issue. The longer term issue is this: how much fossil fuel really is out there? At what rate, even if we do reinvest in production, at what rate are we going to get it out of the ground? Is it finally going to be truly properly depleted in 50 years' time, 100 years' time, 500 years' time? That is still an open question. Now, I know there are people who have their ideological reasons to say, no, 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 it's going to run out tomorrow. Look, it's not true. It's just not true. There's actually a lot of stuff still on the ground. Okay. And so that's the longer term issue. If for whatever reason the price signals do come back, that is oil back to, whatever it is, 100, 200, who knows where it needs to be, that will presumably re-stimulate proper infrastructure investment to get, the exploration going, to get the stuff out of the ground. But that could take years. We could go through a multi-year period of outrageously high oil prices before new capacity is built. And that, I think, is a very real issue for investors.
Big time. When you're talking about the lack of investment there's been in new oil production, I wonder just how much as we've been saying earlier, the green initiative, the anti-fossil fuels initiative, just how strong that is. So, imagine, John, if we got over $100 oil for maybe 2 years, imagine really sustained oil demand, big demand-driven market. I just wonder whether or not we would still see the actual investment made in the infrastructure in more oil supply, or a significant amount that could really take it offline.
Well, look, I mean, you can't tell me that if oil gets expensive enough, you can't tell me that China and India, and for that matter, Japan, are not going to do what they have to do to expand their practical import access, right? In Africa, in the Middle East, offshore in the Indian Ocean,
the Arctic stuff, yeah.
They're not going to mess around. Let's keep in mind, these are countries that are still building coal plants.
Yep.
You can't tell me they're going to shy away from also drilling for oil, no matter what the woke West is up to, right?
Yeah. Oh, yeah, definitely. I mean, I agree with you on that. I just wonder whether the amount of oil that could be extracted during that period would be enough to bring it down when we've seen this massive dearth of...
Look, it's hard to know. And even experts have to do guesstimates, right, regarding what is truly accessible on a reasonable time horizon, even if there is still a hell of a lot of this stuff in the earth somewhere.
Yeah. I think the Biden administration very early on, if memory serves, is very early on when they canceled the Keystone Pipeline from Canada. That did seem to send quite a big signal. It's very, I just wonder whether or not in the West, in the woke West, where all the capital ultimately is, whether there are going to be enough barriers to that, politically erected barriers, which prevent actually a new exploration boom or will significantly hamper it. I was very interested to see how shale, which the common knowledge, everyone knows that everyone knows, is that if oil gets high enough, the boys in Texas just start fracking and huge amounts of oil suddenly arrive on the market and keep it down. And yet that's actually changed now. So despite this very, very strong oil price, we're not seeing a huge rise in production from the shale, the Permian Basin, because all of the investors who still are giving these companies money have said, we don't want to see you actually drilling more holes in the ground. We want you to be much more prudent with what you're doing and just get extracting from what you can extract, rather than going on this big binge of drilling, which changes the game.
Well, it changes the game because it's increasingly political, and it's not just the U.S.; it's also Canada now. You have Justin Trudeau basically telling the relatively resource-rich parts of Canada, Alberta and whatnot, that they're going to face production curbs. No matter how much cheap oil they still have in the ground, they're going to face production curbs. I'm not sure that will go over very well, but it's becoming a partisan issue. Let's face it, right? The oil producing states in both the United States and Canada tend to be right-leaning, relatively more free market, in the US Republican, and in Canada, it's kind of funny because Canada doesn't currently have as they don't have a well organized right wing anymore in Canada, but that will probably change. In any event, you're going to see a reaction against that, right? I mean, these decisions damage those states and those people, and their prosperity relative to the elites that occupy the coastlines and who are driving the green agenda. And don't get me wrong, I'm not saying the green agenda isn't important, but the idea that you just completely throw these other people under the bus doesn't go over, doesn't go over very well politically.
No.
And so I do think there's going to be a bit of a backlash there as a result of these increasingly aggressive attempts to not allow these people to pull stuff out of the ground, which has been their way of life for generations.
Yeah, as an Aberdonian, it does look pretty good for me. Actually, I think
exactly.
It's going to be great for Aberdeen in the near future. But just taking a look at the chat, we have seen a few more comments here. Al comments, isn't the question nowadays not what technology makes most money, but what technology is most palatable to the populace/politics and can be rolled out the quickest? Thank you for the question, Al. John, what would you make of that?
Well, I think it's absolutely right. That's kind of what we're talking about here, right? Look, don't get me wrong. Look, I love technology. All human progress is related in some way to technology. Now, I would say that's an endogenous process with our slow cultural evolution, but technology, if it's not there, we wouldn't have made it very far. And so that's a very astute comment. The problem is this: we've almost become kind of drunk on technology. We somehow think it bails us out of bad social, economic, and political decisions. That is not true. That is absolutely not true.
Alas, no.
And so my concern is that people are now beginning to, and I'm going to use this term for effect, they're beginning to worship technology rather than the judgment required to determine whether a given technology truly serves social good or not, or whether it's just a distraction that can be exploited by one group to take advantage of another. I'm concerned that we're getting to the point where technology, for all of its potential benefits, is not being developed, adapted, and implemented in ways that serve society as well as it could be, as a result of all the distortions we see in prices, as a result of central banks, all the distortions we see in fiscal policy and taxation and whatnot, as a result of those political agendas, and now also as a result of what I do see as heavily politicized ESG. Almost everywhere in the developed world. Concerns me a lot.
Yeah. Interestingly, I did notice how the USS, the pension split, the defined benefit pension scheme that so many people who work at universities here in the UK use, not only were they saying that we can't have benefits being cut as part of one of their recent sort of protests against the scheme itself, but part of the complaint that the pension was cutting the benefits that it had promised. Part of that, alongside that being added in was, by the way, why aren't you guys divesting from fossil fuels? And it seemed, again, it's this strange dichotomy here where actually it's a great time to be invested in oil companies because they're so cash rich and they're actually going to start paying out their dividends. And yet this is the same time people are concerned that the pensions are going to go down, want them to divest from these businesses when they're one of the only money-making businesses in the energy business in general these days.
Well, you're leading into my long short already.
Oh well, actually, yeah. Why not? Why not go for the long short now, John?
Well, okay. I mean, do you want me to go first then? Is that
no? Yeah, you go. You go
okay.
first.
Basically, this is the thing. This COP26 was a big event. But it wasn't just a big event in terms of the number of people, the power they hold, the gravitas, the press coverage. It wasn't just big as an event in that sense. It was the biggest major global climate conference I can remember anyway, that in social media, as well as, in fact, a little mainstream media, regarding just how many private jets, just how many unaccountable bureaucrats are having this big boondoggle up north and partying through the night. Again, I'm going to exaggerate for effect, but you see what I'm getting at. This is the one that I think this big climate conference may be peak ESG, at least for now. I think that we're going to enter a period where investors, some small portion thereof, but all prices are set at the margin, some small portion of investors are going to start reevaluating just what's truly green, just what's truly socially responsible, just what's truly environmentally friendly, and getting a little bit more disciplined. And they're going to start sorting a bit of wheat from chaff. And some of these ESG unicorns, I mean, to borrow that phrase from earlier, will suffer. Their valuations will suffer as a result, regardless of whether their subsidies are under threat or not. The shine may come off some of them. That's the one side. I think ESG is in for a bit of a retrenchment. That's the short. The long is what you just said. Go long the dirty stuff. Go long tobacco. Go long alcohol. Go long fossil. Go long all the depraved stuff, because that's been so beaten up. And look, don't be wrong. I'm not making a moral argument here. But if you're an investor and you just want to make money, I think this is a good moment for this trade. I really do.
Yeah, it is funnily enough, we're thinking similarly this week, John. Though, of course, I should remind everybody, we're not giving financial advice in the show. The long short segment that we have, where we describe what we're bullish and bearish on this week, is not intended as financial advice, but simply for entertainment purposes only. But similarly, I would say, for my long short this week, my long is similar to it's similar to your long here, John. I'm going for specifically Diamondback, which is one of the very, very large fracking businesses in America. I would say the COP26 conference, where everybody is deciding about, what are we going to do now that oil is dead? When oil is actually very much alive, makes me think that maybe fracking is actually going to have a pretty good time of it, especially when they're not spending all of their money on new oil drilling. So I think the fracking industry, so Diamondback is probably one of the most well-known of those businesses. For my shorts this week, I would say now that COP26 has left Glasgow, I'm actually going to say I'm going to short Glasgow. I think this is probably one of the biggest events that they've had.
Scottish.
Yeah, I am indeed, but I'm from Aberdeen, and we don't get along with Glaswegians that much. So I would say my shorts is Glasgow. My apologies to anybody who is watching this who is from Glasgow. I'm just joking around a little bit, though of course at the same time in Scotland the rules with COVID are a lot different. So now that all these exceptions will have been made for all the attendees of COP26, I'm sure they'll be a lot more strict, and all the frivolity will be discouraged, etc., etc. Now, just looking back at the chat, I do feel that we've not been paying it too much attention this evening, and I mean to rectify that. DSM 955 does ask our views on nuclear or hydrogen technology. Now, we have dwelled on this in previous episodes of Southbank Live, John, but just in terms of a short comment regarding what we've discussed already today, when you're talking about China investing heavily in these kind of things, because China's gone big on nuclear as well. They're not the only one just going for coal. What's any thoughts on nuclear or hydrogen in the current environment?
Well, look, we've talked about nuclear before, okay? And I think it's just fascinating to see the huge pivot that's been made over the past couple of years at the highest levels of the ESG, area, that they're rebranding nuclear as green. And don't get me wrong, it's certainly low or zero carbon, depending on how you look at it. But to call it green, it does require you to redefine what green is, because let's face it, the really, really, really toxic nuclear waste that is simply not reusable, refinable, anythingable is the most toxic substance in the known universe. I'm not exaggerating. To call that green is stretching the definition of green. Now, that's not to say that I'm anti-nuclear technology. I'm not saying that for a second. But I don't believe that the new push amongst the ESG crowd for nuclear is as honest and transparent as it should be regarding this long-term issue That is, you're creating this stuff that no one knows how to deal with and which will last effectively forever on a human timeline perspective. So the push to nuclear is going to continue. I think it's obvious. France is going to build a whole new generation, and they're already the most nuclear developed country in the large nuclear developed country in the world. Germany, in my opinion, will do an about face, and they will completely reverse course from trying to denuclearize now that they realize their solar and wind and other renewable efforts have not they haven't even, they have absolutely so not even come close to what was promised, that I would say when it comes to German engineering, this is the biggest failure in my lifetime. The Germans are awesome engineers, and they have so not delivered on this one. It's appalling. And Japan isn't shy about this either. They're absolutely positively not giving up on nuclear, notwithstanding Fukushima. And that's a big deal. So nuclear, absolutely. I couldn't recommend having some allocation to nuclear more. It's essential now. Hydrogen. Look, hydrogen, it almost isn't a technology. I'm being a bit mean here. Hydrogen is generated by other sources of power because hydrogen does not exist freely, right? Hydrogen is always, with such trace exceptions, they're not relevant to the discussion. Hydrogen is always bound up with something else, usually water, of course. But of course, you find it in all kinds of other things, but water is the biggest one. And because hydrogen likes being bound up with other atoms, not only oxygen, it takes energy to split it away again, right? And where is that energy going to come from? Of course, nuclear is a possible source of it. So is coal, so is oil, so is anything. Okay, so the hydrogen issue is kind of like the battery issue. You still have to charge the battery, right? In of itself, it is not a power source. And it almost concerns me that the way politicians are trying to sell this hydrogen push, and that includes, who, Mr. Boris Johnson, they're trying to sell it as if it's a power source in its own right. That is so wrong. It is so misleading. And it's irresponsible to characterize Horizon as hydrogen as a power source in its own right. It's just wrong. And anyway, that does not mean that fuel cell technology isn't cool. I think there might be some really cool applications for it. It is dangerous. It's extremely explosive. Using it for transportation for that reason is I'm not sure how you're going to solve that problem. But if someone does solve it, then it does make it possible in theory to have zero carbon airplanes, zero carbon helicopters, zero carbon anything that moves. And we don't have that now. So if someone finds a way to solve the safety issue around it, because it's unbelievably explosive, they're going to make a lot of money. And if you're invested in that company, you'll make a lot of money.
Big time. There is, I believe, one company, I don't believe it's publicly listed, that is actually attempting to do a hydrogen fuel cell passenger aircraft next year. They're planning that close. Though I must say, if you're afraid of flying in a jet aircraft, hydrogen fuel cell aircraft, I mean, it's really there's going to need to be a lot of alteration to the safety code. I mean, the amount of current that must be going through those things is quite alarming.
I mean, to put things in perspective, again, fossil fuels have their downside, but oddly enough, petrol, diesel, they may burn, they may catch fire. Diesel is actually safer, right? Because it has a much higher flash point. But when they do catch fire, when they do explode, bizarrely, based on what we see in Hollywood, right? They actually don't have much pneumatic explosive force. Not much. Hydrogen? Whoa. I mean, when that goes, it goes. And the same is true of LNG, right? LNG is even worse than free hydrogen. But when they explode, they don't just burn. They don't just make these cool fireballs that make good films. They properly destroy things pneumatically, right? And that's a problem. Again, if someone has a solution for it, great. They're going to make a lot of money, and so will their investors. But putting that stuff into an airplane, I mean, it's not just, oh, gee, the engine caught fire. It's goodbye when something goes wrong.
Yeah. And I do fear that the more we see of this technology, we are, in this era where we are seeing a lot more hydrogen fuel cell stuff. We are going to see a lot of accidents on the newspapers
Possibly.
when this stuff
Possibly.
doesn't work out. So it will be very interesting to see that if they do get passenger aircraft that have got hydrogen fuel cells, before 2025, would be remarkable. Dennis asks, "We're surrounded by water. Why can we not use tidal energy?" You got any thoughts on that, John? I remember recently.
I do.
Or actually,
And
carry on.
actually, this is an anecdotal story from when I was young. I grew up in the San Francisco Bay Area. The Golden Gate, which is only about 1 mile wide, is a unbelievably powerful tidal channel, because not only obviously is the Pacific Ocean subject to large tides, but San Francisco Bay is not simply a bay. It's an estuary fed by two very large rivers that drain the Sierra Nevada mountain range. And as a result, the tides you get, especially at certain times of the year, they're unbelievable. And in fact, they're so challenging, sailors see it as a real challenge to get boats in and out during certain tidal periods. It's kind of like a bravery contest almost, because if you get something wrong, you're in serious trouble. In any event, it was proposed when I was a child to place a tidal gate for generating energy from the tides. And when you run through the physics of it, the weight of water in both directions, depending on how the tide's going, through that would power the entire San Francisco Bay Area. The entire San Francisco Bay Area. This is a metropolitan area with nearly 20 million people when you add it all together. And this
Energy
one
hungry.
tidal gate, the flow of water in both directions, tide in, tide out, which is way more dependable than wind power or solar. And this was proposed when I was a child. Now, if it were that easy to implement, why haven't they done it? The problem is this: salt water is unbelievably corrosive, and no one has been able to figure out how to deal with the saltwater corrosion. You come up with this huge tidal dam hydro complex thingy, which would last only about 2 years before it would have to be scrapped. And this is true of all the wind. I mean, not all, I'm exaggerating, but a lot of the wind generation along the shorelines of Northern Europe and the Baltic and whatnot. A lot of these wind turbines and the blades have already reached the end of their useful lives after just a decade. Why? Because the salt in the air is corroding them at a rate far in excess of what was forecast, and they're falling apart. So if you think it's bad in the air, try it in the actual salt water itself. That's a problem. Again, anyone who finds a solution for that is going to become
Gonna
the
be rich.
next billionaire for sure. And anyone invested in that will also benefit. But no one's done it yet. And and they've been trying since I was a child.
That is interesting. I hadn't heard about that one with in San Francisco, John. It does feel like it's quite an incentive for somebody who can figure out how it works, how to prevent the erosion of salt erosion on these devices. I remember recently there was some interesting green corporate espionage that took place, where there was a Scottish startup company that was working in tidal energy, and their offices were broken into not long after they'd met with, I believe it was a Chinese energy sort of ambassador kind of thing.
Right.
And anyways, the offices were broken into, and then a very, very similar device suddenly showed up at one of the Chinese unicorns not long after. I don't know how successful the technology ultimately was, but it was one of these interesting sort of adventures in green energy. Funnily enough, Peter did comment that the unicorn was a Chinese symbol for divine influence. So maybe we were just misinterpreting what the original definition of a unicorn was back when there were these small startup companies. Maybe a unicorn, the definition can change now. It is a divine recognition of a company's value ultimately. We do have a question here from Susan. asking how will we cope without oil when it seems to be part of the manufacture of so many items? For example, plastics in mobile phone cases, which I think is a very fair comment. A lot of people don't really understand where a lot of things come from. That comes from oil. Of course, the majority of oil is not used in the manufacturing of things like plastics. However, it is a significant amount. And as the oil price goes up, do you ever think that a high oil price would lead to a significant amount of inflation in the cost of plastics, John?
Well, yes, of course. Other factors equal it would, right? And it's kind of funny because people our age have no memory of a world without plastics. But in fact, until the mid 20th century, most everyday items were still made from traditional cloth, leather, metal, whatever it was. Plastics really only begin to dominate the consumer products market after the Second World War, right? When
Right.
it goes absolutely ballistic. There's that famous scene from that famous film, The Graduate, starring Dustin Hoffman and Bancroft and others, where an older man tells a younger man that if he wants to get wealthy, he should get involved in plastics. That film did not come out until the late 1960s, and so even then, plastics were seen as revolutionary. And of course, we've now lived through this revolution of plastics. That said, it is encouraging to see that there are lots of new substances that where people have discovered how to modify them in ways that allow them to have similar characteristics to plastics. And a lot of these come from certain types of plants with certain types of fibers and whatnot. However, and this goes back to our earlier discussion, none of those other substitutes for plastics has yet to achieve the same economies of scale and efficiencies that the plastic industry has long since achieved. So if you want something which is impermeable, which is sanitary, which is lightweight, which is strong and flexible and adaptable to God knows what manner of or variety of consumer products, nothing comes close to plastics yet, notwithstanding those efforts. Again, someday, some of those efforts might be hugely successful, but we're not there yet.
Right. Maybe we will see that. Maybe some new form of I don't know, maybe some form of ceramic or something. There'll be no wonder.
Right.
Well, people have been talking about graphene for an awfully long period of time, and maybe graphene's the future, and it always will be. But maybe we'll actually see some change when it comes to consumer materials, especially when you consider all the green stuff we see these days and how it's clogging up the ocean. Maybe someone will make something that's actually biodegradable. It is interesting when you consider that through plastics, mankind's created this thing that lasts for centuries, and yet we use it for things that we use for barely a second.
Well, if you're going to create something that lasts for centuries, you should also create something that efficiently recycles it. And I am aware of efforts to try and find ways to efficiently recycle plastic, but they are still efforts, right? They are. It's not yet at an economy of scale size efficient to recycle plastic, but we might get there. And if we do, again, those who discover that opportunity, those who invest in that opportunity, my word, if you're able to recycle plastic in a way that we finally figured out how to recycle certain other things like aluminium, that's a big deal. Aluminium is not easy to recycle. A lot of work went into that, right? It's not an easy metal to work with. It's not like iron. There are some metals that recycling is pretty straightforward. Aluminium is not, and yet we kind of got there. And so maybe eventually there's going to be a big breakthrough in plastics too.
Well, let's hope so.
I hope so.
Looking forward through the chat, we do get quite a have quite a few here, and I do realise that time is getting on, so I would like to get through a few of them while we can. Vincent asks, what do you read into Larry Fink's comment that climate pressure on public companies as opposed to private is the quote biggest arbitrage in my lifetime? That's a very good question, Vincent. Larry Fink, of course, being the founder of BlackRock and a huge multi-trillion-dollar asset manager. So Larry Fink is, when we're talking about paying for access or investing in access, Larry Fink has an awful lot of access. So, what did Fink mean by that, John, when he said that climate pressure on public companies is the biggest arbitrage in my lifetime?
I suspect he is becoming a little bit skeptical about some of this and basically saying, look, the point of companies is to make profits. And I run an investment firm. So obviously we're looking for companies that make profits. But if public companies are under these really increasingly strict ESG directives, they won't have the same flexibility that small businesses will have, private businesses, potentially unlisted ones that BlackRock can't really invest in, although I suppose they have some venture capital arm perhaps associated with themselves. But I think that's what he's getting at. And so the idea is that he's kind of making a statement that some of your larger public companies just don't have the flexibility anymore to punt around on the sidelines with technologies that might not tick the ESG boxes as they need to. And they're more concerned about the image of their core operations. Whereas small, dynamic, private, unlisted, unknown companies can sort of get up to whatever they want. Now, that said, those companies tend to have higher costs of capital for a variety of reasons, but he may have a point. Again, I'm not sure what he was getting at, but I suspect that might be it.
On the topic of COP26, if we go back to that, actually, John, end of the world does comment that precious metals and Bitcoin mining surely was brought up back, during the conference, either not publicly but maybe privately. I certainly think the Bitcoin mining, I'm sure there were conversations about that going on, and of course, it being cast as very anti-ESG. And when you're talking about the dirty industries, Bitcoin mining is very, very popularly cast as a something very bad for the environment, even though a huge amount of it is only mined using renewable energy. But do you think there was any discussion there when we're looking at creating a green future and making sure every financial decision takes climate change into account? Do you think there's going to be politically driven, in the woke West, to borrow your phrase, political decisions made to try and stop that? Of course, we've seen China ban Bitcoin, and then now they're talking about unbanning it again. They've done it, the whole unban process they've done many times. Maybe we'll see them do it again. But just in terms of things like Bitcoin mining, or maybe even precious metals mining, do you think that's something that they'll try and discourage using political means in order to make a green future?
Well, again, the mentality of people like Carney is that they discourage anything they can't control, and so yes, of course. I mean, when in doubt, of course they'll try to control it or ban it outright if they don't know how to control it. So that's not going to stop. Bitcoin is very energy intensive, as you say. Some Bitcoin miners make an effort to try and hook up to what they claim are renewable sources of energy. In some cases, I suppose those claims are probably true. But that said, the energy market is the energy market. The price is set at the margin. I don't really care in a way if your particular energy comes from a wind farm. The fact is, if your wind farm energy is pushing up the price, that is your demand for that wind farm energy is pushing up the price of the clearing price of energy generally, then that poor old couple that struggled to heat their house in winter are still going to pay higher bills, even if their source is their oil tank.
Yep.
Look, if you're trained in economics, you understand. You should learn to look at the big picture, and you can't just single out, oh, gee, this happened to come from my local windmill. Don't get me wrong; I have nothing against the local windmill, but the idea that somehow means that your demand for energy has no relationship to the energy market generally is just wrong. You can be off the grid in a physical connected sense. You can't be off the grid in a price sense. There's always an arbitrage, always a trade. And we were taught that by, well, the Austrian economists in particular, but some others have done so too. In any event, I think that this whole push that we're seeing towards digital currencies, at some point they're going to demonize Bitcoin big time. They're going to say, oh, well, we're a clever central bank. We've come up with a digital currency which is greener than Bitcoin. And so this is the one you're going to use because, of course, if you don't, you're not green. So they're going to use a moral argument at some point to get you to adopt their central bank controlled digital currency and ditch Bitcoin. And if they choose to try and ban it in the West, which they might well do, certainly the US is getting a little bit heavy-handed. Some other countries might too. I suspect they'll play the green card when they do it. They'll say, look, we're terribly sorry, but this Bitcoin idea, while it looks kind of clever, uses too much energy, and we're green now. So you're going to have to use our greenback dollar digital currency as opposed to Bitcoin.
Yeah, I can imagine that. Though I must wonder, John, if the accusation that anyone uses Bitcoin is a money launderer, an arms dealer, a drug dealer, or worse, if that didn't work, do you really think the renewable side will be that's the political firepower that's needed to drive it through?
Look,
Anti-Bitcoin
they'll
regulation.
try. They'll try, right? Why not, right? I mean, they've invested so much capital in this idea that we all need to be told what to do because we're not green enough. I mean, they've invested so much capital in it. I don't see why they won't use that capital in their push towards a digital currency somehow. I think they'll give it a go.
And one last thing, we have gone over, we're now at the sort of around the hour mark, so we'll have to end this soon. But we do get a comment from P. Lewis, who says, great observation, guys, fascinating insight. What do you think is the outlook for the oil price? Well, P. Lewis, thank you very much for your compliment. Glad you're enjoying the show. In terms of the outlook for the oil price, well, we can't give financial advice, so we are just giving market observations. Maybe halfway through this year, at the beginning of this year, I was thinking oil was going to hit $100 this year, and we've still got a month left. Well, we've got 2 months left, so maybe it will. But I was, it's not. It's very damn high. I think we are definitely going to see $100 oil plus. If not this year, then we're definitely going to see it next year. That'll be my view. John, what would be your take on that?
Well, look, I think I said perhaps in one of these chats, or I wrote in a recent paper that I do think we're going to see triple-digit oil before too long. Whether it happens this year or next year, as you say, there's only so much time left this year. Also, we do see demand coming off really hard in China and a few other places. So oil maybe do a short-term setback. That said, our earlier discussion about underinvestment in new capacity, I think very much higher oil prices, gas prices, coal prices, fossil prices generally are in our medium-term future, even if we're going to suffer a cyclical setback in the near term due to demand coming off very, very hard. Demand is coming off hard. Look at your leading indicators. It's not just China. You're seeing it elsewhere. That will impact the energy market in the near term. And so, yes, we might not see $100 oil soon, but next year, before the end of next year, I think oil will be triple digits. I think gas will not be as high as it is today, but it will remain elevated in any reasonable seasonally adjusted historical comparison. I think coal will retain most of its gains that we saw this year, which were spectacular.
Yeah.
I think all of that is inevitable, and uranium will just keep going and going higher. I don't see what's going to stop it now.
Very, very good observations there, John. As ever, it has been a great episode. I would like to delve deeper into your views on why China is in a recession and what that's going to do for the rest of the world. Hopefully, we'll be able to do that in an episode coming up. But that is all we do have time for today, folks. Thank you to all who tuned in live. It has been great to respond to your comments, to see what people make of the things that we discuss in the show. We shall be back again in the future, of course, with another episode of Southbank Live. But that is all for this evening. Thank you so much for tuning in. If you do like this, do give us a like and subscribe. If you are watching a recording of this and there's something you'd like us to discuss in future, do feel free to leave a comment below this video. But as I say, that's all for now. Thank you so much for watching, and we'll see you next time.